For a lot of people, investing in the stock market seems too complicated and intimidating, but you've always wanted to jump in and make a little money or save for retirement. We're going to help you get started today.
We're here to brush us up on the basics with her Stock Smarts is Deborah Borchardt. She's the market analyst for TheStreet.com. Deborah, good morning.
Hey, Deborah.
Good morning. All right, let's get right to it. A lot of confusion, certainly, when it comes to investing in the market. And this week, I mean, a lot of people look at these IPOs, and we saw how Twitter has been going up and then now recently down again. This week, it took a huge plunge. First, just why did this happen, and what does it signal to the rest of us?
Well, as you mentioned, Twitter went public 6 months ago, and so the market has a rule that if you're an insider, say you're someone that works at the company, that you can't sell that stock for 6 months. And this is so that the first day it goes public, it doesn't crash and go down. So this week was when that moment happened. The lockup expired, and so all these people that maybe got stock as part of their compensation, they sold it this week, so the stock went down.
I think a lot of people who are thinking about getting into the game know about some of the blue chip stocks. They hear Twitter's hot, or they hear Google or Apple. For you, though, for someone watching at home, what's the best first step into the water? How do you get into the game?
Well, you really look at the companies that you know. Look at the things that you're already familiar with that you like, and pay attention to that. So say if you're someone that works in an office and all your girlfriends are maybe buying Michael Kors bags instead of Coach. Last year, everybody had a Coach bag. This year, everybody's buying Michael Kors. Well, that tells you something. And sure enough, we saw that in the market. Michael Kors stock went up, Coach stock went down.
How do you know when the timing is right to buy into a stock? I mean, I think it's like trying to buy low and, certainly get your profit when you sell high. But it's hard to predict.
Right. So there's always these people that want to time the bottom. They want to get it at the lowest price possible, and that's almost impossible. And I really believe that when you buy a stock, you should buy it and hold it for a certain amount of time, a year, 2 years, even 5 years. And so picking that bottom is really hard. Just watch the stock, and you can always buy in increments to average out your costs. But don't try to pick the bottom.
I've heard some people say a good way to get in, just to start, is to buy one share of a company you really like. Let's say it's Apple. Now, that's become very expensive at almost $600 a share. Do you like that strategy? Just get in the game?
I like the idea of people getting started. The only thing I don't like about just buying one share is you don't have much flexibility. So if you buy a cheaper share, maybe a cheaper stock where you can buy, say, 20 shares of it, well, if it goes up, well, then you could keep 10, sell 10, and now you can buy another stock. So now you've got two stocks, and you have a little bit more flexibility. With just one share, you're all in, so it's either you're in or you're out.
I think a great way to get in the market is investing in your 401k plan. A lot of people don't realize. I mean, that's a great way to buy shares in companies, and it's spread out. You're not putting all your eggs in one basket, and you get the tax free, it's tax-free for the years that you're working at the highest potential. So are a lot of people maxing out their 401ks?
I think a lot of people don't take advantage of that. And if you work somewhere with a 401k, absolutely, always, always, always take advantage. And if they match it, go to the max. And you can, again, build up if you're worried about not being able to miss that money. Start low and build up 1%, 2%, 3%. You'll never miss it. And then all of a sudden you look at your statement and you have all this money set aside. And a lot of 401k programs will let you borrow against it. So if you're worried about tying your money up, you can borrow money from yourself.
I'm going to give you a lightning round of terms people hear. Tell us what they mean real quick. Blue chip stock is?
A blue chip stock is a established, well-known company that tends to be very stable.
How about a speculative stock?
Speculative stock tends to be a very small company, and the price bounces up and down a whole lot.
And a stock split is?
A stock split is when a company usually feels that their stock price has gotten way too high, and they'll split it.
As we saw with Apple announcing they're going to be splitting 7 to 1.
Right. 7 to 1.
All right, Deborah, thanks so much.
Thanks,
Great information. Appreciate it.